Welcome back to Business by the Books. This is the podcast that teaches you how to use your financials to better manage your business. My name is Danielle Hayden. I'm the founder of Kickstart Accounting Inc, where we use bookkeeping as a vehicle to help business owners take control of their numbers. And I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're going to be diving into what we look at as the money team in our internal financial statements. What is our process? I was recently asked on a podcast, does the money team have a money team? And the answer is yes. So I'm going to be pulling back the curtain and walking you through our framework, which has inspired the framework we teach our clients to help you understand how your money team is looking at their money. All right, so what does our money team look like today and how did we get here? So first of all, I did not start here. We have been in business for over 9 years. So be patient with yourself as you are building out your team. So if you are newer in business, just know that what I'm talking through is coming from a place of somebody who's been in business for a long time. And I was involved in business at a higher level in my previous career before starting Kickstart Accounting. So just know that if you are building your money team, it is okay to be right where you are today. So like most solo business owners, when I first started, I was doing the bookkeeping. Now, thankfully, I knew how to do the bookkeeping. So it was okay that I was doing my own bookkeeping. I knew that my financials were accurate, that I can file my taxes with that. I could file my taxes with them, and that I was looking at accurate information, which is not the case for so many business owners. I know as business owners, you are amazing at your craft and doing what you do, and that does not include the bookkeeping. However, I had the skill set to be able to do that. So I did go ahead and do my own bookkeeping. But here's the thing, guys. It was like the shoemaker's kids run around without shoes. My financials were always the last to be done, and it was painful. It would be the end of the month. All of our other clients had received their financials. And as I was prepping their financials, I kept on thinking, gosh, how are we doing? But I didn't have the time and the capacity to be able to take the time to update QuickBooks. And then once I updated QuickBooks, I really didn't have the capacity to look at my financials like a business owner and make business decisions with them. That's when I was about 2 years in when I decided that I could no longer be the one who was doing that day-to-day bookkeeping. So I had one of my team members who was doing bookkeeping for our clients come in and do the bookkeeping for Kickstart. And so they handle the day-to-day bookkeeping just like they did for all of their other clients. So I almost became one of their clients where they were going in and updating transactions every single week like we do for our clients. And then she would reconcile Kickstart's books alongside all of our clients. And she would send me the financial statements and the snapshot, again, just like our clients receive. So as we created these reports, I was really looking at them right alongside you, our client, to see, does this work, right? Is this the right information? Am I able to make business decisions with this information? And what's really cool is that as we developed the snapshot, I had taken all of the things that I had learned from corporate. When I was in corporate, I was a CFO or chief financial officer, and my job was literally to give the financial data to the board of directors, to the CEO, to the management team, so that they can make business decisions based on the financial statements. And so I took what I learned and I said, all right, these things really need to stay in the corporate environment. And these are the things that I can take with me into entrepreneurship. And so the financial statements and the snapshot that has been created for both myself and for clients has really been an art between pulling things from corporate that we could really use in entrepreneurship and leaving the things that wouldn't actually serve a small business owner. So who else is on my money team? I have a financial advisor that I work with personally. Now, what is a financial advisor? The financial advisor is that person who is helping look at long-term personal financial goals and growth. So part of what's important for me is to know that I will be able to make a contribution to my kids and be able to plan for retirement. I meet with her every 3 months to walk through my personal financial goals and how that's aligning with the business and how the business is going to support me. I also have a CPA who works with me on the actual tax return at year end and then tax planning throughout the year. So I as well have all three team members. Now, over the last year, I have realized that it's really important for me to have a CFO who is not me. Now, this was a difficult decision for me because, again, I'm capable of doing the job and I actually really enjoy getting lost in a spreadsheet and looking at things strategically. But what I realized was that I'm not able to look at my business without the narrative and the stories that I'm telling myself, right? So I'm telling myself a story about why things didn't work in the past or why I have things structured in the way that I do. And therefore, I'm carrying those stories with me into my financial analysis. And I really needed somebody to come in and question what I was doing, why I was doing it, and what was the impact to both my team, to my family, to me personally, and how I was making business decisions. So I have all 4 team members on my team. So I have a bookkeeper, that's somebody who's internally staffed here at Kickstart Accounting, who treats me like a client, like they do the other clients. I have a financial advisor who's helping me look to the future and plan for retirement, a CPA who's helping me with tax planning and filing my tax return, and then a CFO who is helping me look at the business strategically. Now, all of this is done with me, not for me. And I think this is really important. I've always considered Kickstart Accounting a done for you service. And what I've realized over the last 18 months to 2 years is that this is really done with you, our client. And my money team cannot do what they do without me. If I am not participating and I'm not answering their emails, showing up for calls, and reading the information that they provide for me, it really doesn't serve any purpose. It doesn't do any good, right? Like, yeah, fine, the bookkeeping's done. Yeah, fine, I can file the tax return, but I can't do anything actually meaningful with the data. And I think that's a big shift. I saw a reel recently on Instagram, and it was a funny reel about a personal trainer and his client. And the client, was saying how frustrated that she was that she hadn't been hitting her goals. And the trainer asked, okay, well, tell me a little bit about your week. And she was sharing how she had a bottle of wine every night. She went out with the girls. She wasn't sleeping very good. She only did one of the 4 workouts. And the trainer laughed and said, I need you to participate in this journey with me in order for you to have results. And so I want to call on all of you who are listening that I am calling on you to participate with us. I need you to look at the financial data and the information and do the exercises, listen to the podcast, and actually take the clarity break, the CEO days, where you're looking at this information in order for you to grow your business, in order for you to understand the numbers. Unfortunately, I can't sprinkle the magic wand or give you a pill where you're magically going to understand this information. It takes you participating in it in order for you to receive the results. Now, I want to walk you through what I'm looking at in Kickstart's financials as I review our March's snapshot. So I'm looking at our March 2024 financial data. So this is all of Q1. And I am looking at the snapshot that we send to every single one of our clients. Now, the first category of the snapshot is revenue. And we look at revenue in really 4 different ways. So we look at this month's revenue and we compare that to March of 2023. I want to see how much we've grown year over year. Now, I am isolating it to just March because I want to see if I had a dip this month, if I had some seasonality, did I have that same dip in seasonality last year? Next, I'm looking at year-to-date revenue. So I'm looking at 2024 as a whole. And then again, I'm comparing this to last year, year-to-date. Now, what I'm looking for here is I want to know, did the trend from March span all of 2024, or was March an isolated incident? So if March was a fabulous month, which March was a really great month for us, it was our best month year to date. Was that reflective throughout all of 2024? Or did I just have a great March and I need to change and react in order to continue that momentum? So for us, March was a great month, and thankfully, 2024 has been a great year to date. So I know that March wasn't an anomaly, that we've actually had month over month success in 2024. In terms of revenue, this is not profit. This is not expenses, right? I am purely just looking at revenue in this first category of the snapshot. Next, I'm looking at revenue this month compared to my rolling average. Now, again, this is what every single one of our clients receive. Now, again, for us, March was a great month. And so it was over our 12-month average. And so here, I'm really just taking a moment to celebrate the win. As business owners, we're always just moving past our financials, moving past the successful times because we want to get on to the next goal. And let me tell you guys, I am seriously just as guilty as the rest of you of I do not celebrate our wins. I usually need our EOS integrator, Kevin, or somebody on my team to say to me, hold on, Danielle, pause. This was a really awesome team meeting. This was a really awesome revenue goal that we hit this month. This was an awesome profitability. Let's pause and celebrate. And that's something that we do for our clients very often, is to say, hey, hold on. Did you celebrate this? Like, let's actually take a moment. So for us, we are celebrating. Now, if you are not celebrating this month's revenue over your 12 months average, seriously, do not worry about it. It is okay. It's just really important that you're thinking about what happened, right? Like if you just blow over it and you're not actually thinking about what happened, like what caused this dip, you don't have the opportunity to change your behavior or your business's behavior. So I just really encourage you that if you had a loss this month, don't brush over it. Don't put your head in the sand. Don't get scared. I want you to acknowledge that the revenue did dip, and take that time to really ask yourself what happened so that you don't make that mistake again. And maybe it wasn't a mistake, right? Like maybe it's just truly seasonality. But just know and understand that. All right, next, we provide all of our clients a chart of their revenue over the last 12 months. And then we are also looking at a projection for the next 3 months. And we do that because that's what I want to look at as a business owner. I don't want to just look at it very focused, like, okay, March was a bad month and now I'm going to put my head in the sand. I'm going to cry about it. I'm going to feel like a failure. I'm going to let the stories in my head start to creep in. I'm going to look backwards to see what the trends have been. And then I'm going to look forward to see what the trends are going to be. So I am looking backwards to see, is March an anomaly? Is there seasonality? What happened? What can I do differently, right? So I am looking at the seasonality over the last 12 months. Now, we had a peak in the fall around September, October. So for me, that gives me a clue. I want to go back and look at the other things that happened around that time. Did I speak at a conference? Was I on a podcast? What marketing or sales strategies did we implement during that time? Again, our financial statements provide an opportunity to learn and grow. And so if I just blow over this, I am missing out on that amazing opportunity. So here I am now going to jot down that I need to look further. This isn't going to be something that I can just see in my financial statements. So the work doesn't stop here with the financials. I need to see what happened during that time, and that's going to take me out of the financials. So I'm jotting it down on a piece of paper so that I can dig in and reflect when I'm done reviewing my financials. If I go digging right now, like I am the queen of a rabbit hole. So I will go down a rabbit hole and I'll never review the rest of the P&L. And I think that that's what happens to a lot of business owners and our clients, is that revenue's fun, right? Like bringing in sales, when you're in growth mode, looking at your revenue is a really exciting activity. You can look at your team capacity. You can start looking at your marketing, the sales strategies. Like that stuff is really a fun exercise to do. And so if you go down that rabbit hole right now, you're going to miss out on the rest of the financials and they're going to tell you a whole nother story. So write that down and come back to it. All right, next we're looking at operating expenses. Now you're going to hear a theme, right? Because I'm looking at this month's expenses compared to March of 2023. I'm also comparing year-to-date expenses compared to year-to-date expenses from last year. Now, my expenses have been out of control this year. So for us, we have very high expenses in the month of March, and we have very high expenses through 2024. So I am seeing the trend. It's not just that I had an anomaly in March. If just March was high, but year to date was stable, I would want to do some digging as to what happened in March, knowing that I don't have a trend for all of 2024. Now for us, I know I have a trend, so I need to jot down on that piece of paper. I'm not going to go down the rabbit hole right now, but I'm jotting down that I need to look at my expenses on the P&L to really see what happened in 2024 and why are my expenses so high? And does that align with our goals? Now, I know for me that because I've done this work, it completely aligns with our goals. We are in a growth mode and we are hiring our team to be able to meet the growth of our organization. And so you need to know what your goals are. What is your theme for this year? Are you in stabilization mode? Are you in growth mode? Are you in a balanced mode where you are balancing a business and personal situation? Know what mode you are in, what your intention is for this year, and then do your expenses for this month and year to date align with that goal. We'll get back to the show in 1 second, but real quick, are you an entrepreneur or business owner struggling with the complexity of tax deductions and salary structures for yourself? It's common to feel lost in the maze of tax regulations and unsure about how to effectively pay yourself from your business. Navigating these challenges can be daunting, leaving you with more questions than answers. But what if there's a way to simplify this process, ensuring you maximize your deductions and set up the most beneficial compensation strategy for yourself? That's exactly what our guide on the top tax deductions for every business owner and how to pay yourself as a business owner are for. These resources are designed to demystify the essentials, helping you understand and leverage tax deductions and outline a clear, effective strategy for your salary as a business owner. Through these guides, you'll learn the key deductions you shouldn't miss, strategies for tax-efficient salary and owner's draws, and much more, ensuring you're financially optimized and compliant. So if you're ready to take control of your financial health with confidence, head over to kickstartaccountinginc.com/gift or click the link in the show notes and download your free resources today. Okay, back to the show. Now from here, if your expenses were only high in March and not in 2024, this is where I'm going to ask you to scroll down in your financials. For us and for myself and for my clients, we provide a chart of your top 5 expenses. Now, if you don't have access to that type of material, you'll go to your P&L by month and look at the March's line items to see what your highest expenses are. Now, one other clue that we give our clients is we have our expenses compared to the 12-month average. Similar to year to date, but we're looking at a longer time span. So are our expenses higher or lower than our 12-month rolling average? Again, it's not judgment. This is just, does it align with our goals? And is there anything that's working or not working for us? So for our team, for when we are looking at our financial statements, our top 5 expenses are payroll. It is payroll, it is operations, and then it is subscriptions. Now, I am very familiar with our financials, so I know and understand that. And I know that again, aligns with our growth strategy for this year. Now, for you as a business owner, I want you to look at what are your top 3 to 5 expenses and want you to ask, does that align with your goals for this year? And is there anything that's working or not working within that? Just because it aligns with your goals, if it's not working, we need to take action. Again, this is done with you, financials. So we're supplying you with the information, but it's your job as the business owner to take that information and to react to it. And so if these top expenses, maybe they align with your goals, like maybe you had a high growth mode, but you have paid ads running in a consulting firm and the ads aren't actually turning into customers and revenue, it's time to book a call with your marketing consultants to help you understand why, right? Like, are you still building traction? Do we expect that in the next 30 to 60 days that we'll start to see an actual ROI on that, right? So it gives you clues to then be able to go have an additional conversation with the team who's impacting you here. So don't just look at the expenses and freak out, right? You have the opportunity to look at it and then be able to take action. All right, our next category is net income or profitability. Our operating profit. This is the profit, the money that we have after deducting all of our operating expenses and cost of goods sold. Remember that if you are an S Corp, you are paying yourself through payroll and you are an expense to your business. So we want to see our clients at 15% profitability after paying the business owner. That is a very healthy, sustainable business. And I'll be honest with you, we're not there. So that is a goal for us, but we are not there this year. If you are an LLC, your payroll is hitting on the balance sheet in equity. So as you take owner's draws and personal expenses, those are all on the balance sheet and therefore does not lower the net profit of your business. Now, this net profit is really, really important because it's also how you pay taxes. Whether you're an S Corp or an LLC, you pay taxes on your net income. And so again, for me and my clients, we get a year-to-date tax reserve. I am required to pay tax estimates based on my prior year taxes. However, because this year we might be doing better than prior years, I will have to save money in a tax reserve account. Now, I have 3 checking accounts here at Kickstart. So when I tell you guys about the 3 accounts, like I'm doing it. And so I'm sharing this with you from what works. We have 3 accounts. We have our operating account. Money comes in, money comes out. That's where we pay payroll, credit cards. Then we have our tax savings. So every single month we are transferring money into our tax savings account. And then we have a third account that's kind of a rainy day bonus fund. So it is really important for us to be able to pay bonuses at the end of each year. And so we're saving for that throughout the year. So again, 3 accounts that you want to have, and 2 of those are just savings accounts so that you're prepared for the end of the year. So again, you'll see a theme. We're looking at net income for this month. We're comparing it to last year. And then we're looking at the year-to-date profit and comparing that to last year. I want to see, is there a trend in March that I need to be aware of? If I lost money in March or it's changed significantly from last year, I have homework to do. I need to then go to my income statement and find out what expenses and what revenue contributed to me losing money this year if I didn't lose money last year. All right. So if I lost money this year, but not in March of 2023, I have some digging to do. I need to have some homework. So I'm jotting that down. But I don't want to forget about my profit year to date, because again, this is the number that I'm paying taxes on. And this is the number that I need to know because it smooths out the month-to-month roller coaster. Now, we're also comparing the net income to our rolling 12 months. We want to see our rolling 12-month average. And for us, our net income is higher than our rolling 12-month average. So I get an opportunity to celebrate and say thank you to my team. So it's important that I reflect on what happened this month so that I can continue those behaviors moving forward. So again, look at your net income compared to your rolling 12-month average so that you can reflect on what's working in your business. And if you are lower than your average, please forgive yourself. It does not mean I want you to bury your head in the sand next month. I want you to dust your knees off and come back. Now, again, I'm looking at the last 12 months plus a 3-month forecast. So I am always looking backwards and looking forward. Again, we have a CFO. So we are looking at our budget and projections. So we have our bookkeeping in place that helps us look backwards and gives my CFO the tools to be able to look forward. So when I'm looking at my profitability for the last 12 months, I'm looking at the months that we had a dip, right? So there are months where there's a significant dip. And so it gives me an opportunity, not to beat myself up, but an opportunity to go back and look and see what happened during those months. Did we invest? Did we hire? Were we training? What happened during those months? Now, I know, again, the big dips, I know exactly what happened. So for us, May and January are always very difficult months. So May, we have a ton of expenses that come due. And it's just a lot of annual subscriptions. So we know every May that we need to plan for that. Now, in January this year, there were 5 payroll runs. We pay our employees weekly. And so we knew that there was going to be more payroll costs in the month of January than February. And so we saw a dip in January and then an increase again in February. So you need to know, as you're looking at these profitability numbers, what happened during those times. And so if you have contractors or employees, did you pay those team members more during that time that contributed to the loss or to the gain of your business? So just remember, we really want to look at the profitability, not with judgment, but an opportunity to learn. And next, we're looking at the cash balance. So again, every single one of our clients received this snapshot, and the snapshot is just a high level overview. You can hear me. I have not touched my P&L yet. I have not even gone into the profit and loss statement. You hear how much information I was able to gather at a high level that I haven't even had to open QuickBooks. I haven't had to dig into any details yet, because it's important as business owners that we're staying at a high level. If you're spending your time in the details, you never get the opportunity to really reflect at a bigger level. So this is still, again, in the snapshot. We haven't opened a balance sheet. We haven't opened an income statement. We haven't opened QuickBooks, right? I want you just to be able to see this information for what it is, the high level, so that then you can look deeper and reflect. And I haven't even told you to open up QuickBooks to reflect, right? I'm telling you to think about what's working, what's not working. Talk to your sales team, talk to your marketing team, talk to your operations team. It doesn't include going deep into the weeds. It's having the strategic level conversations with the people that you've partnered with in your business. All right, so next we have cash on hand. This information does come from your balance sheet, but this amount, we're looking at a picture of what it was at the end of March, and we're comparing that to the rolling average. I don't want you to react if this month is low. So we always give our clients a chart. You'll see a trend. We're looking at the last 12 months plus a projection for the next 3 months. And so what's happening today, is that a trend over time? What is impacting my cash? And so I know for us, we have big swings in our cash around the times where we are paying out bonuses, we're paying out tax payments. I talked about May being a high subscription month for us. So I know that there's going to be major swings in cash and maybe even debt around those times, so that it can support those initiatives of the company. And so again, you're looking at the cash not as a way to judge yourself or to scrutinize or to point out your failures, but as a way of learning about your business. Now, the cash is going to tell you another story. It's going to tell you if you are taking out too much money from the business in owner's draws, personal expenses, and taxes paid. Now, owner's draws, personal expenses, and taxes paid do not hit your P&L. These numbers are on your balance sheet in your equity section. So it's just like going up to the cash ATM of your business. It doesn't affect how much profit or how much taxes you're paying. You do not pay taxes on owner's draws. And so this cash balance will also tell you if you are taking too much money out of the business. We see this as one of the number one issues from our clients. we'll tell them, you're so profitable, let's celebrate. And they look at us like we're crazy. Tell me where all my money is. I have no money, so stop telling me I'm profitable. But what's happening is that we're commingling business and personal. All those personal expenses are landing on the balance sheet. All those owner's draws, it's going into the cash ATM of your business. So all of those owner's draws are showing up on the balance sheet. It's not lowering the tax liability. So you're showing a profit, but you're suffering in cash. So this chart can tell you a lot of information to give you clues as to what you're looking at. Now, every month, right, there's a lot there. So we could get into a rabbit hole again of going through every single number on our financial statements. There are 3 financial statements: the income statement, the balance sheet, the cash flow statement. You can run your income statement 4 different ways. And so I encourage you to really simplify it. Look at your numbers at a high level so that you're only looking at the big picture. Once you've jotted down the themes or areas that you need your attention, you can go deeper into those areas. You can book a call with your money team, which I encourage every single one of you to do. Whether you're a client of Kickstart Accounting Inc. or not, you should be booking a call with your money team. They can walk you through what the numbers are telling you. They can walk you through the details so you don't get lost in the maze of numbers. And honestly, you don't ever have to open up QuickBooks, right? So talk to your money team. So for me, I have an internal call with my bookkeeping team and then my CFO team so that I can then navigate those trends to make sure that we're in alignment with our budget and with our annual strategy. Now, if you do not have this type of visual in your business, I encourage you to go to kickstartaccountinginc.com and book a call or sign up now. The snapshot is one of the most amazing things that we have ever created. It gives you the opportunity as a business owner to look at your numbers at a high level with some great visuals so that you're not getting lost in all of the numbers. If you are a current client of Kickstart Accounting Inc., please open your snapshot. I hope today was helpful in hearing how I digest the information in the snapshot and how I use it to then guide my business decisions in business. We have built a team of amazing bookkeepers and account managers who are here. They show up for work, really super excited every day, ready to pour it back into their clients. And so I encourage you, every single one of you, have a Calendly link, book the call, talk to your team, let them help you, let them celebrate with you, let them help you navigate the bad times. We are here for you. We want to be that resource for you. So current clients, go find your Calendly link, grab your snapshot and book the call. Done with you. This is done with you. It is your turn, right? We have sent you your snapshot. It is your turn as the business owner to take that snapshot and reflect and decide what you're going to do more of and what you're going to stop doing right away. All right, don't forget to hit like and subscribe. I will be back next week on more ways that you can use your numbers to understand and manage your business. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.